You're all welcome. If you're just joining us, you're all welcome. If you're just joining us new, you should like the stream, subscribe to the channel so that you get notified whenever we're having these live streams. There's a lot to be learned here. So let's get on with the analysis. We are currently on gold. As you know, gold has been moving sideways for a while now, for two days now. This is from the 4 hour perspective. Price has been moving sideways, and when we scale up to the daily time frame, you can see this. If I clear out this, let me clear out. You can see for 2 days, price has been stuck around this area. Price has not broken above or below the level, so we are stuck in a range. And the way to approach this, we are going to mark out our key levels from the 4 hour time frame. So currently we have already marked out our support level here, so I'm going to mark out our resistance area. So this is how I'll mark our resistance area. Remember, our resistance area here is where price has been to, where price has been to, or price has shown us multiple weak rejections or failing to break. That's why we drew out this level. We want to account for as many weak as possible. We have 2 weak rejection around the area, so we identify this as a strong resistance, and this is our support. The same principle, you can see multiple weak rejection. Price is not breaking below the level, and that was why we drew out this support. So what can we see after we mark out that level? Let me do that here too, so that it will be more pronounced. So this is our support. Let us also mark our resistance. We are going to scale down, don't worry. So here is our resistance area. So we'll scale down now to the 1 hour time frame to see the behavior. So as you can see, this is the behavior of the candles. Price is not breaking below or above. Discard this. This is just a false breakout and breakup back in. So don't take this serious. This is a false breakout and break back into structure. So we'll be focusing on this information here. So as you can see, throughout yesterday, price has been moving sideways. Price is not breaking below or above, and we identify that the overall trend is up. The overall trend of the market is up. So we're only going to be looking for buys, but the only time our bias will change is when this level gets violated. When we have a strong candle close below this area, below this level, this support area we have drawn, that's the only time we'll start looking for selling opportunity. But right now, even though we know that price might break below, we are not going to sell the market yet unless this level here, unless we have a strong bearish candle close below the level. That's the only time our bias will change, and we'll start identifying trend reversal. But for now, we are just waiting. Remember, trading is 90% waiting and only 10% execution. I know most of you out there since yesterday, you feel the need of taking a trade, but you should avoid taking such trades. Only focus on taking high probability trades, and that's where you are going to make your money. Because if you try to trade the ranging market, it's a very low probability trade, and your chances of winning is really low. If you take a buy here, there's a high chance price might wake you out before going up. So the chances drop dramatically. But once we have that break of this level, price close strong below, the only thing we look for is a pullback for a retest. We'll scale down to the 15 minute to get an early retest and safely place our stop loss above the level. You see, you can have just a 3 pip stop loss on gold, and your reward, okay, just you can enter a trade here. That's when we have the break of this level and place your stop loss above the level. You might get a 3 pip stop loss, and just look at your profit range, your TP range. So this is what we identify as a high probability trade, and this is how you need to be trading. And if you are taking a profit challenge, there's no time limit, so I don't know why you need to be rushing or you must feel the need to take trades every day. Take your time, pass your challenges, get funded, scale up your trading career. If you are trading a personal account, the same principle apply. You have no pressure. You should relax. The motivation of making quick profit is what is going to bring you down. So you should avoid doing that. So if you are currently on the live stream, you should like the stream, subscribe to the channel so that you get notified whenever we have this live stream. So that's the analysis for gold. But let me draw the analysis for you guys. Let me draw the analysis. So we anticipate, as we said, we anticipate a break of that level. Break of the level. I want to see a clean break. Let me make that a little bit pronounced. So we want a clean break, a retest of that level, then only then can we enter the market for a continuation down. So this is what we anticipate the market to do. Remember, after any strong push phase like this, if the trend was already up and we suddenly start identifying consolidation, it signifies two things: either there's low volume or a depletion in the bullish momentum. The sellers are now stepping into the market, so they're having a tug of war around this area. So 60 to 70% of the time, when price is consolidating after a strong push phase or uptrend, price usually break below down. But I'm not saying it doesn't break up and continue up, but most times it breaks down. But we need more evidence for us to. Our evidence, as I said, is we need price to break the level, come back for a retest before we enter the market. So after the break, we'll be patient enough to wait for a pullback from the 15-minute candle to get ready for a continuation back down. Remember, the strategy we use is a break and retest strategy. 80 to 90% of our trade is based on the break and retest strategy. But if you're a breakout trader, you can set your sell stop order below this week, so that once price start breaking the level, to trigger you into a trade, and you can safely place your stop loss above the level. But the reason for not setting a sell stop order now, because we are not yet sure if this level is going to hold, and price might come here, trigger you in and close in the structure, leaving a weak rejection like this. So you see you can still lose the trade, but we want a clean break. Since this level has been holding for some days, once we have that break, there is a high probability price will continue down. So that's the reason why we drew out this. So we need a clean break, retest to get a continuation back down. So keep that in the back of your mind. You should avoid trading the ranging market. As I said, it's a low probability trade. Don't feel the need to trade every time you come to your charts. Once you can't identify a good opportunity, it's better to just look at your chart or close your chart and still check for another opportunity later. But it's not that once you are on your chart, it's not compulsory that you must take a trade. Keep stressing that fact. If you want to scale up your account, come to your chart. If you can identify a good opportunity, fine, you can trade. But if there's no good opportunity out there, you should either draw out your level, have a plan and wait for your plan to play out. If it doesn't, you can wait or close your charts and check later. But this need of always taking a trade when you come to your charts is what's holding you back. I can tell you, I've been there. So you don't need to trade every day. I know all of us have bills to pay, so that motivates us to, like, we try to take trades just to fasten that process and be profitable. But that doesn't really equate to success in Forex. So you need patience and you need to be strategic. You need a trading plan. So that's the analysis for gold. And let's check out other pairs like the pound JPY. So for the pound JPY, the trend is also up from the 4-hour time frame. Let me draw out our trend line. So as you can see, the trend is already up. There's no doubt about it. And for my community, I show them this trend line strategy I use sometimes, and the idea is once the market is trending, this only works when the market is trending up or down. This doesn't work in a sideways or ranging market. So if the market is clearly ranging up, in this case making higher high, higher lows, higher high, higher lows, the market is clearly ranging up, this is when you can use the trend line strategy. Or if the market is moving down, making lower high and lower low. So let's use this as an example. So based on the trend line strategies, once we identify the trend is up, first thing we'll do, we'll use the 4-hour time frame. As you can see here, this is the 4-hour time frame. You need to be using the 4 hours plotting out your key levels. So after scaling up to the 4-hour time frame, we draw out our trend line. So this is a trend line here, and as you can see, based on the trend line strategy, anytime price gets close to the trend line, price push up. Anytime price come to the trend line, price push up. As you can see here, so this is a trend line strategy. Unless this level is violated, unless the trend line is broken, the trend is still up. And if you are taking a buy, your stop loss must be below the trend line. Below the trend, once you enter here, your stop loss must be below the trend line. So that's just a summary of the trend line strategy. If you want more of that, you can simply join the trading community or get yourself the course, the master course. So that's it for the trend line strategy. So on pound JPY, we are only going to be looking for buys, and to take any buy, remember the market is in a push phase now, so any buy you take, there's a high chance price will pull back and stop you. So you need to wait for price to get close to the trend line. The trend line has to be longer, so you need price to come back to the trend line and show you sign of failing to break through multiple week rejection. Let me show you that. You need to see multiple week rejection. In this case, you can see multiple week rejection, so it's a strong sign that the bearish momentum is depleting, and after the depletion, the bulls step into the market. And push the market up. As you can see in this case, that's why you need to be using the higher time frame for your analysis. If you were using the 15 minutes to draw out your level, once you start identifying this, you would think maybe the trend is changing since price is breaking the trend line. But if you scale up to your 1 hour or 4 hour time frame, you can see this is just a week. You can see it's just a week rejection slightly below the trend line. And on the 4 hour time frame, you will definitely see a wick. As you can see, it's just a wick. It hasn't broken the level, and that's why you should always use the 4 hour to mark out your level. So that's it for pound JPY. You're only going to be looking for buying opportunity. Once price gets close to the trend line, start showing us signs of weak rejection, failing to break, that's the only time we'll buy the market and place our stop loss below the level. So always trade with the trend. Avoid trading against the trend because you have low resistance. Imagine jumping in front of a moving train. It's going to crush you. So you need to join the train, not trade against it. If you identify when you come to your charts that the market is up, I beg you guys, buy the market all day unless the trend changes. And I'll be making a video this week for you guys on how to identify when a trend is changing, the signs you get. I've been getting multiple requests on that, so I'll be making that video to how to identify that a trend is changing. So I'll be making that video, so you should keep updates as soon as I drop it and watch that video. And as I said, if you are just joining us, you haven't subscribe to the channel, give us a thumbs up. We have multiple viewers, we have fewer likes. If you are gaining any value from this stream, and if you want me to keep doing them, give me a thumbs up now. I need this to get 20 likes. It shows me you guys are learning, and I'll keep making time to make this live stream for you guys. So do that for me now. Really appreciate. So that's the analysis on pound JPY. Let's check on another thing I want to stress. I keep saying this, you should always get 1 to 2 pairs you trade only. If you are really serious, I'm just telling you this out of experience. If you are really serious about scaling up your account or being successful in trading, look for at least the maximum of 2 pairs to trade every day. Once you come to your chart and there is no trade on those pairs, you should avoid trading any other pair. Avoid trading any other pair. If the 2 pairs you trade is gold, let's use this as an example. Let's say you trade gold and pound JPY, and when you come to your charts, you check out your gold and the pound JPY pairs and there's no good trading opportunity, you should resist the need on checking other pairs for a trading opportunity, because as I said, you don't need to trade every time you come to your chart, because every time we open our chart we feel this need of taking a trade. We can't just sit on our chart and observe the market. So how are you going to grow when anytime you come to your chart you just feel the need of just pressing buy or sell without really taking your time to analyze the markets and plan your trade? So you should avoid doing that. These are some of the tips. They are very valuable if you take them serious, and you should also take at least the maximum of 2 trades per day. The first one is only trade 2 pairs. Look for 2 pairs you trade the most. I know most of you guys, or most traders, that's 80 or 70% of traders trade gold. So trade gold and choose one other pair and add it to it. There's power in focus. When you focus your energy on one thing, there's really power. You will get an overall feel of how the market moves. Your attention will not be spread across each pair, and you really understand them. I don't know how to say it, but just try it out if it's something that works for you. But that's what I did when I was first starting out. I trade everything. I trade Bitcoin. I trade Euro USD. I just go across the board looking for trading opportunity. That's what I basically do. And as you know, my result was random. I might gain for a day and lose everything that same day, because I was always chasing the market. If I don't have a trade here, I look for another pair and just decide to take a trade just because I want to trade, because I have bills to pay. So I feel that need to just take a buy or a sell just to make profit. So your motivation and what makes you to join trading is also going to hinder you. That's why emotional control is very important. I know we all have goals, we all have financial needs, but if you take that financial need to be the fuel or the reason why you must trade every day, you are going to lose. Let me be honest with you guys. Just the emotional fuel without a strategic plan or emotional balance is going to cause you to blow up your account. I'm just being real with you guys. That's just the truth. So keep that. Regardless of your motivation, your bills to be paid, still try to be disciplined and have the emotional control when you come to your chart. Because one thing, the market doesn't know who you are or your motivation. It doesn't know whether you took a buy or a sell. The market does what it does. So you need a plan. You need the emotional side and also the logical side to be profitable in the trading. So have that balance. So let's check on US oil if we can get an analysis on that. Remember, we are not taking any trade. As I said, this is what we are waiting for. We either wait for price to break below, come back for a retest, and to get into the market around the level and our stop loss above, to get a continuation back down to some of this level here, or for price to break above and continue its bullish trend in accordance with our overall momentum, which is up. So we are not trading against the trend. We only have a plan in place, and if our plan plays out, that's the only time we take a trade. So we only have a plan in place, and as far as this doesn't work out, I'm not taking any trade. I'm not comfortable taking buys unless this level is broken and price show me sign that there is a volume in the market, or there's high probability price will continue up. That's the only time I will be taking buys. But I'm not really comfortable taking buys because this level has been holding and the volume. So what I'm sticking to, if price violate the level, this support level we have drawn, that's the only time I'll be considering taking a sell. So that's how you need to be trading. Set your plan and wait for it to play out. So we are currently on US oil, and as you can see, let me draw out our trend line. Let's start from the trend line. As you can see, price was moving up, respecting that level. Price was respecting the level and making a clean trend up, and suddenly that trend was broken. I think the trend was broken twice. Let me view that. Let me zoom that in. So here was the break. The trend was, we have a break out and a break back into structure around this level. So the trend was basically up, and suddenly, this is a 4-hour time frame. As you can see, we have a strong bearish candle. Price broke the level. Price came back for a read. I think I took this trade. Around this level last week. Yeah, last week. But I lost that trade. I identified this as a retest. I placed my stop loss above for a continuation back down, because that's how the market works, or the trend change. Remember, the market is dynamic in nature, so nothing is constant. But if you take your trades strategic like this, your chances of being profitable is very high. As I said, if you take 10 trades and you win only 4 or 5 out of them, you'll still be profitable in the market. If you use a good lot size, if you go for a 1 to 2 or 1 to 3 risks to reward, you'll still be profitable in the long time. So once I identified this break and the pullback as a retest, I took the sell, but I lost it. Price broke back into structure. It happens. As I said, nothing is perfect in trading. No strategy will guarantee you 100% win rate. No strategy is going to guarantee you 100% win rate. So we have the break back into structure, and we also had the break of the level again. As you can see, price broke the level again the second time by this candle, and here was the pullback. This weak rejection was a pullback. So let me scale down. If you have been trading for a while, you will understand. If I scale down, you see the pullback clearly. Let me scale down to the 1 hour. So as you can see, this was a pullback, this bullish candle. After the break, price pulled back to the trend line that was broken. And after the break, what do we see? A continuation back down. So imagine the same day I lost that trade, and I still took the same trade like that other one, and I win the trade. Yeah, let's say I still took the trade again. I was patient enough. I wait for price to get back to break the level again and come back for a pullback. And after the pullback, I took the sell again, placed my stop loss above the level. Just look at the beauty of that. You might be sitting in a 1 to 6 or 1 to 7 risks to reward now. I'm not saying you are going to hold the trade back down here, but if you approach your trading as a numbers game, as a probability game, that's the only time you are going to start seeing results. Because most of us, once we have lost the same trade here, we'll be scared to take another identical trade at this level. But if you if you put it in the back of your mind that trading is a numbers game, you win some and you lose some. But your edge and the idea is when you lose more. When you lose more because you have a fixed risks on each trade. You have a fixed risks on each trade. So when you lose more. But when you win, you capitalize on that, and your winnings cover your losses, and you still end up profitable. That's why I keep stressing the fact to risk only 1% of your total account size. But this will be impossible for traders who are trading maybe $100 account, $50 account, because they do not have enough capital. And taking trade, let's say trade on gold, you need a minimum of at least 3 pips to have a little bit safer stop loss. So if you have, let's say you have $100 account, it's impossible to risk 1% because the micro lot size I think is 0.01. So if you're having a 3 pip stop loss on a $100 account, you are risking 3%. That's $3 on each trade. So unless you are really lucky, and this brings us to another tip, this idea of flipping small account. Flipping small account is possible, but let me be honest with you guys. When you are trying to flip a small account, let's say $50, $70, $100 account, and you are using the stack up position, you are literally gambling. I think I made a short about that yesterday. You are literally gambling. There's no doubt about that, because when you are using the 0.0 lot size and you stack up 5 or 10 positions on the same pair at the same time, it only takes one thing to go wrong, or to be wrong once, to blow up the account. Because number one, you are over leveraging. You are risking more than 3%. You are over leveraging. So flipping a small account is possible, but just know that you are just gambling. But if you want to do it strategically, it's possible. You can still flip a small account, but not in a day. Trying to flip it in a day, just know it's not based on ability. You are gambling. That's the truth. But if you are trying to flip $100 account, I'm advising you to use the 0.01 lot size for 1 week. If you are up in profit, let's say if you are up 5 or 10% in profit, you can adjust your lot size to 0.2 and take the maximum of 2 trades per day. That's when you're up in profit the next week, you can start risking 0.2 lot size on each trade. So that's how you do it, and it takes time. But if you're trying to flip it in a day, just know that you are just gambling. So that's the truth. So on US oil, we are back on the chart. On US oil, the way I will trade this, the market is already pushed. So I think your high probability trading opportunity will come at this level. This level here. Remember the same thing I just told you guys. Let me still show you. I think the break and retest strategy is the best. It's the best. Same thing applies here. After the break of this level, we have a retest. This bullish candle here. This bullish candle was a retest. Let me scale down so that you guys can see it clearly. Let me use the 1 hour. As you can see, this was a retest. Price came back to the level to retest that level before going down. So if you took the sell around the level and your stop loss, you can see you can have a very small stop loss, and this is what some of you guys know as a sniper entry. you literally have small or 0% risks on that account, because you can safely place your stop loss here few pips above the level and can see your risks, your reward. So that's how you do it. But if I'm going to be looking for selling opportunity now, I need to wait for price to get back to the level again, because price usually pull back to the level again to create what we identify as a double top. So price might pull back to the level. That's why patience is key in the market. If you want high probability trades, you need to be comfortable with being patient and waiting for trading opportunities. Don't chase the market. So yes, let me mark out that level. Nope, not this. I just deleted that level. Let me see, draw the level again. So as I said, if you are looking for a high probability selling opportunity on US oil, you need to wait for price to come back to this level and show us sign. It's not about price coming back to the level. Once price get to the level and you scale down to your 15 minutes of 5 minutes time frame and start seeing multiple week rejections, that's the only time you sell the market back down. So that's it from you on US oil. So we are back on gold, and gold is breaking that level above. So if price broke the level, if price managed to break and close strong above this level, we'll be buying the market all day. But I need to see a 4-hour candle close above this level. I'm not taking the 1-hour candle close, because the 1-hour candle close can be very tricky. You can take the trade, you can, once we have a 1-hour candle close and we don't have a 4-hour candle close, if the market close, we might just get a weak rejection, a big wick like this, and price will close below on the 4-hour time frame. You get to understand this, you get to understand it. If you don't understand it now, I understand, but as you go along, you understand this principle. So if I can get a 4-hour candle close above this level, there's no doubt we'll continue up. But unless I can get a 4-hour candle close, I'm not buying the market yet. So keep that in the back of your mind. So as I said, if you are just joining us, you haven't subscribed, give us a thumbs up, subscribe to the channel. You don't want to miss out on this live stream. We share with you live tips and strategy, how to mark out your key levels. We drop free signals like the one I'm just doing. This signal for me, I think this signal, I'm just giving you the best high probability trading opportunities to set and wait for. I'm not here to just tell you to take a buy or a sell. I'm showing you how you can approach the market strategically. So I said we need more likes. If you are gaining any value, I need this to get to 20 likes. If I can get 20 likes, we'll keep doing this stream. It shows me that you guys are learning. Let's push this to 20 likes. Really appreciate you guys. The likes are going up. Give us a thumbs up. It takes you a second, but it does a lot more for the channel, and we keep on doing this. We also offer VIP Signal group membership. If you are a trader out there and you just want to get high probability signals on gold or other pairs. You tell us the pair you trade, and we'll give you daily high probability signals on those pairs. So we have a VIP group for that. So you can chat me up, check out the video description, there's a WhatsApp link. Chat me up, or you can chat me up on Telegram. Check out my page, ZyusFX. Chat me up and I'll give you more details about the membership. You get high probability trades each day. That's whenever there is a high probability trade, keep that in mind. We only give high probability trades when you have low risks and higher reward. And if you also want to scale up your trading knowledge, we have a master course online. You still offer the same thing. Chat me up, you'll be added to the master class. There's a lot to be learned. So I think that's it. So we currently have that candle close, that 4 hour candle close, but the candle, you can see the range of the candle. The range of the candle is not really encouraging. The range of the candle is not encouraging. And if you scale down to the 1 hour, you can see this. This is what we identify as I'm not really saying this is a break. We need a clean break above the level. So this 4 hour candle closed, but it didn't close strongly like this. You can see the range of this candle.